What's up, everybody? Get full screen for y'all. All right, it's Kylan Hayes here. Sorry if there's much noise in the background. I just want to make this video for y'all. Those of y'all who are in our private student group, we all know that I did a call last night and gave a little bit of homework. That homework being to analyze the market structure using key levels, mark it up, send it to me, and I will grade that. Now, of course, that was January 16th, 2021. Those of y'all on YouTube, you could be viewing this video later, but regardless of when you're viewing this, I want you all to know how to use key levels to analyze market structure. Now, here at Outcome Reach, we all always say that each one of the educators have their own unique way of viewing market structure, how the market moves, how to catch these entries. This is the specific way that I look at market structure. So always good just to broaden your horizon and see how people look at things. Hope you all found value into it, but let's get into it. So, as we all know, the key thing about smart money is that it is the opposite of what retail does. And in this specific scenario, we're going to be discussing support and resistance. So, let's pretend price was right here. Now, of course, this was in April 15th, 2015. So, this is a while ago. But looking right here, what do you all see? Look at the chart, y'all. You see two wicks hit right here. Now, what's that called? That's just resistance. What retail is expecting price to do is to come up, hit that resistance, and shoot down, right? That's retail. What retail also expects, or what a possibility, is the possibility of a fake out. They cannot stand fake outs because fake outs make them hit the stop losses. So there are two things that you see retail doing. They're going to have their sell limits right here at this white line. Let's pretend none of this has happened yet. They're going to have their sell limits at this white line. They're expecting price to hit this line like this. It'll come up, hit this line. Where's my brush? It's going to come up, hit this line, and shoot down. And this is important because up here they have stop losses. Now, that's just one way that retail is looking at this. Another way that retail is looking at this is saying, okay, I think their price is going to continue to buy. So up here, they have their buy stops. They're expecting price to break up here, maybe give a little retest and keep shooting up. And they have the stop losses down here. Now we know that we do the opposite of that. We follow what the banks are doing, but the banks know what the retailers are doing. So they have this very intricate way in which they go about stopping both of them out. And how they do that is you will see a key level of support or resistance, and banks will do this on both sides. That way, if they were selling or buying using sell limits or buy stops, they both got stopped out. This is what we expect, or what I expect whenever I see a level of support and resistance. What do you see right here? Drag it over. You see that price is exactly that. The banks push price up. If they had a buy stop in here, their buy stops are activated. Now it's a buy market execute order. And then price slams back down. So everyone who was buying got stopped out. Let's pretend they had a sell limit in here. They would have been selling right on price with this white line, except price went above that. So they got stopped out. Now, why is that important to us? Because we know as smart money traders that this whole theme, what I just told you, represents the first confluence of smart money, liquidity. Now, how do we use that? Whenever you see a key level like this, resistance, you see resistance again, oftentimes you'll see resistance turn to support, yada, yada, yada. That's where we're looking for our entries. We're looking for a break of that, and then that's where we're going to look for our outcome candles. So let's analyze this a little bit. Find out several examples. I'm just back testing this pair. So you see price slammed up here, right? We expected that. We knew, okay, here's your resistance. We know price, as we just said, it's going to slam through and stop out both sides. When it did that, what did it leave down here? It looks like a bunch of jumbled up mess on this time frame. But if you go to a different time frame, you're going to see an outcome candle. You're going to see these four candles for this large candle up is going to end up being one engulfed candle. So what does smart money tell you? You're going to put your buy limit right there and your stop loss right there. And look what price did. Price came down, broke this level again, because now we're here where they were selling it. Retail is not looking at this key level, and they're expecting price, or they were expecting price. If we go back a little bit, they're expecting price. Okay, here's your key level. Come down, hit this level, and shoot up. Underneath here is their stop losses, or they have their sell stops down here with their stop losses up there. We see that once again in which banks do this. They will take price and they will do this. That way, both sides get stopped out. Come down here. Here's your key level. Banks did this. Bam, bam, bam. Both sides got stopped out. How did we catch that? When price did this first rally through the key level, what was right here? The outcome candle. So we could have caught a buy. The risk of that, about 40 pips, which is a lot. We have ways, if you're a student, you know how to mitigate that risk. 40 pip risk, price went up 250 pips. I shoot for 50 pips a week. That's 5 weeks worth in one trade. But let's keep it going. Moving on over. Now, this key level still exists. I know some of y'all may ask, Kylan, how do you find the key levels? Look for resistance that's turned to support, or look for double tops, or look for double bottoms. All those are key levels. You see it again right here. You can drag this over the same key level. And really, it's not going to be a line. It's going to be more of a box. So actually, let's go ahead and put a box in, because remember, this isn't going to be exact. It's going to be more of like a zone. So really bring it on over here. You don't really want to be trading inside, because this is where the fake outs are happening. You want to be trading either above this or below this. And what do you see? Look, price hit resistance, price hit resistance. So what are we expecting price to do according to what we just went over? We are expecting price to take this key level, or now as we're going to call it a key zone. Price is going to go like this, fake out both sides. What do we see right here? Here's your key zone. Price came through it. People were buying, they got stopped out. People were selling, they got stopped out. All that. We're looking for an entry on one of these sides. So what did price do? You see your last down move before it goes up, your entry would have been right there. How do you find the precise? Well, join our group chat, DM me, how do you find those precise entries? We'll tell y'all exactly how to find it. Let's keep on moving over. I mean, they say that the market moves in cycles. It's completely true. Now, you're not just going to see one key level throughout the entire market. If it were that easy, everyone would be profitable. You're going to see multiple. So the best way to start by doing this is just to learn how to find these key levels. What do we see right here? I see resistance, price hit, price hit. There's a double top. Now, let's look at the example right here. People were expecting, they see that price hit this area 2 times. They were expecting price to do this or do this, right? What the banks do, they slam price right through it. And oftentimes what you will see is that rejection. So you see it like what we just went through, except it's going to be a little bit smaller. You see it like this, slam through, go up. Now, Kylan, I know what y'all are asking. Kylan, isn't this outcome candle right here? Isn't this a rally, base rally? How come this one got blown right through? I'll tell you why it got blown through. Because if you bought this outcome candle, you'll be buying with the retail. But I know what y'all are thinking. You were like, Kyle, look, here's your liquidity right here. The outcome candle broke the bottom side and the top side liquidity. Take a step back. Look at the bigger picture of the market structure. We look for our entries after these key levels have been broken. And we know what key levels do. I'm going to draw it again to get this stuck into y'all's head. Here's your key level. We're expecting price to do this number right here. Come on over. If you would have bought right here, you're buying with the retail. Because retail sees resistance that got blown through. They're expecting it to turn to support. So if you bought right here, you bought with the retailers. You bought before it got stopped out. So you would actually be incorrect. What you saw price do instead is what we've highlighted right here. Here's your key level. Price burst right through it. It came here. It burst right through it again. That is what you're waiting for. You're waiting for both sides to be taken out. I know y'all saying, Colin, whoa, you're getting a little deep with it. Well, let's keep going. Bring it on over. You see price getting stopped on both sides. And whenever you see this dilemma, you know that the institutions are loading up their orders. They are loading up their orders. Whenever you see price going in and out of key level, the institutions are at play because people on both sides are getting stopped out. People are like, oh my goodness, I'm losing all my money, my account's blown. Well, sorry. Y'all good, I'm saying. But let's keep looking at it. Sorry, I didn't do that. Now, what else should I tell y'all? Another way to identify these key levels is resistance turning to support. Let's come over here. What do you see? I see a top right here, resistance, hits again, resistance, hits right here, turns to support. Bring it on over, hits, it's support. Hits again, it's support. This is an entire key level. Bring it over here, once again, it's support. Bring it over here, once again, it's support. But the key about this is look what price is doing. Look at the bigger picture, y'all. Bring this down a little bit. Look at the bigger picture. What did we say price is going to do? You see your resistance right here. Look what price does. Slam, slam, slam. Takes out both sides. If you see key level, you're going to see this every single time. Look right here. Slam, 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 before it shoots up. Kylan, where do you find your entries? Well, look at this. See how this week bust through, activated the sales stop support, shot up. Everyone got stopped out. We've seen this broke through this key level. Now we're going to enter right there. What did price do? There's your outcome candle. Hit it, went up. Risk to reward, I risked 20 pips. Price went up 208 pips. That's a trade for 4 weeks worth of me. Kylan, how come this rally-based rally got blown right through? Your key level's down here. Why are you trading up here? That's gambling. Let's keep looking at it. Bring it on over. You will see this. Once you get this in your head, you will see this. Look up top. What is all this? This is support. Price blew through it. It turns to resistance. What are the retailers expecting price to do? Bounce off the zone and shoot down. But what does price really do? Goes above it, hits above it, hits above it, and goes down. Where are we looking for entries? We're looking for entries once this key level has been broken. Here's your key level. We know that the retailers are entering right on this line. We're expecting our entries after the line got broken. We're expecting price to take this key level, slam, slam, slam. So where are we going to find our entries? Since we're selling, we're looking above it. What do you see right there above it? The outcome candle. And here's the beauty of this one. What was your risk? 16 pips. Price went down 263 pips. How many entries have I? That's 3 clean entries, and we're just back testing. Let's keep it going. I'll find y'all some more. Now, here is a really big example. You see this key zone right here, right? And really, you can even see it down here as well. Whenever you see this, look, this is a clean example. Slam, 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 slam. This is nothing but stop outs. On the higher time frame, it'll be even clearer. Whenever you see price going in and out of a key level like this, the institutions are loading their orders up. Here's the difference between us and retail. We are looking for entries during this. We're saying, okay, price is doing this thing. We know we see price going in and out of these key levels. That's what we're looking for entries. That's when we go to the higher time frame and find an OC over here to the left, or we go to the lower time frame and wait for price to start distributing and then enter when price breaks structure. Retail is entering right here. They're saying, okay, price is going down. They're FOMOing in. We don't do that. So whenever you see price going in and out of the key level, you know the institutions are loading up. You're looking to your left on the higher time frame, or you're looking for distribution or accumulation, depending on if you're buying or selling on the lower time frame. Let's keep moving on over. What do you see right here? I see support. Bring it on over. It's saying, okay, the support is going to turn to resistance, which it does right here. It doesn't go directly in the line. It goes a little bit above it. Just a little bit above it to stop out the retailers. What does it do? It's this drop-based drop goes. A little bit of short term. Why is it short term? What do you see? Come on, cooperate with me. Key level. Bam, bam, bam. Where is price going? We see this price going in and out of a key level like this. We know the institutions are loading their orders up. We're looking for a sale somewhere in here because we know that we're in a downtrend. Where specifically are we going to look for a sale? Down here? No, because your key level, the one we just had, is up here. We're looking for price. Here is your key level, and here. We're looking for price to break through that. Price broke through that key level, took out this inefficiency right here, and collapsed. That's yet another entry. Keep bringing it on over, y'all. Keep bringing it on over. Do y'all see? I hope y'all are getting this. This is super easy. Once again, here's your key level, right? That was support, turn of resistance. Price broke through it right here. The retailers are expecting price to hit this and collapse. Above it, stop losses. Above it, sell or buy stops. So we know price is going to do bam, 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 bam. Take out both. What does price do? Move it on over. Here it is again. Bam, 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 bam. Most retailers are avoiding this. This is where we're looking for entries. Bring it on over to the left. This is like a mess on this time frame. On the higher time frame, that would have been your outcome candle. Once again, there is yet again another entry. What's the risk right here? 20 pips. What's the reward? We would stop down at this lower out right here. 376 pips. Y'all, how many entries have I given you in this one video? It's this easy. If you can get this in your head, this is going to change the way you look at things. Look at this right here. Here's your key level, right? See support. Or let's even go back a little bit further. Here's your previous key level, price going in and out of that. You see the turn to support right here, support right here. Look at this. Bam, 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 bam. This is when you're looking for entries. And we know that we're in a downtrend, so of course you're not going to be buying. You can get a short term, like you got a short term one right here, but that's not reliable. What did price do? Came up. This is the inefficiency play. Where are you going to enter with the inefficiency play? Well, look, here's another one of these scenarios where the institution is loading up. Look at this right here. Bam, 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 bam. That's another key level. We're expecting price to break through it. Price broke through it, took out the inefficiency, collapsed. How much is that play worth? That is another 300 pip move right there. Now, Kylan, what time frames do you look for the key levels? 1 hour and above. You can find levels on the lower time frame, they're going to get stopped out because the higher time frame always wins. Really, you're going to do them more than the 4 hour. When you look at charts like this is going to develop your patience. Because you know that unless you see this, until you see this happening, you don't want to be entering. You're not going to enter until you see price near a key level. That's part of my trading plan. I'm not entering until I see one of these key examples of price near these key levels. When y'all look at the markets this way, it will change the way you do this. So the homework, I know this is in the future for a lot of y'all, but those of my students or our students, I wanted to have them go to a chart just like this and just find examples of this market structure. You all go actually print it out. Print out a sheet of paper, mark it up. I know y'all like, how are you finding these key levels so easy? The more you do it, the easier it'll be. And look at this one right here. Wow. Last one for y'all today. Resistance right here. Price hits this level, hits it again. What do you see right here? Bam, bam, bam. We know that's when the institutions are loading up. And what do you see right here? It collapses. How'd you get that entry? Probably would have been on the lower time or the higher time frame. You could have called, actually no, just went to this key level up here. Just in your key level right here. You could enter looking for entry around there. Probably it's going to be on like the daily or a weekly. That was the OC. Or what you could do, this would have been the spring on a distribution schematic. You would have entered off that retest in here and you would have called that. How far did that go? 1,760 pips. I'll lead y'all to the water, but I can't let y'all drink. I can't force you to drink. Take some time, back test this. Let us know if you have any questions. With that, hope y'all found value in this. Y'all have a blessed day.